Welcome back, everyone. Michael here with Offshore Citizen. Today I'm going to discuss with you some tax myths related to Portugal. Portugal has been one of the hottest places that people have been promoting over the last, year or 2 years. And I mean, there's some good reasons for that. There is also a lot of selling that's going on. And I dislike when there is selling. I'd rather kind of have the straight facts. And so today we're going to discuss the straight facts with you, some of the myths that are out there, and therefore some of the things that could get you in trouble, and how Portugal is not the be-all and end-all for a certain set of people, in spite of the fact that I've had some of those people contacting me. And so I want to give you some good information in that regard. Before we cover that, if you haven't already, please hit the subscribe button, hit the all notification bell. Appreciate your support. Give it a thumbs up. If you would like help with figuring out the best place for you to relocate, how to optimize your global taxes, setting up companies, opening bank accounts, getting residencies, citizenships, creating the best plan B, etc., please reach out to us. You can book a call with me, calendly.com/Michael-Rosmer. There's a link in the description below, or you can send a message through our website, offshorecitizen.net and offshorecapitalist.com. We are happy to help you with figuring out the best solution and then helping you to implement that solution. Okay. So Portugal. Portugal, I guess, became really popular in particular as crypto went way up, mainly because of the fact that it is one of the unique countries in the EU that more or less didn't tax crypto. Now, I'm going to talk about that in a second because there's a bunch of caveats around that a lot of people will not tell you, and so that's important. In addition to this, it has the NHR, which is, for certain people, a good tax plan. It has fairly accessible visa options, including the Golden Visa, and the Golden Visa legitimately probably is, for many people, the best way to put themselves on the road to EU citizenship without having to become tax resident in a country that they're kind of building up in over time. So these are some pretty attractive factors, okay? However, there is a bunch of strings attached to that, and it seems like there's been a lot of people out there who have been just hearing Portugal, 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 and thinking, oh, Portugal's this great place to go as some tax paradise, and this is absolutely not the case. So in particular, I'm going to caution anyone who's a freelancer / digital nomad type person that this may not be a good way to go for you. We'll cover some of the details in a second. I have a bunch of other videos on Portugal kind of going over various different aspects for you. Now, the other thing is, obviously crypto is down, but that being said, crypto is not necessarily zero tax. I've done a video on this before, so that's something to be aware of. And then you may find yourself in a situation where you can benefit quite a lot if you have a certain set of backgrounds. So we're going to start with those ones who can benefit in general first. So if you're somebody who buys crypto, holds it, it goes up, you sell, at the moment, until they bring in new crypto regulations, this is zero tax. That's great. Now, some people have said, oh, they're not bringing it in. I did a video on this before. To clarify, there was some bill introduced that was shot down, but it was not introduced by the ruling party, and so it really had nothing to do with the overall statement by the government that they're bringing in crypto regulations. So very high likelihood they still are bringing in crypto regulations. They're working on it, just not one from one of the small fringe parties. It will come out of the main party. So we'll wait and see what that ends up looking like. My guess probably ends up looking like capital gains, but that is also the case. And this brings us to the next set of people, which is people who happen to have a foreign passive business. They can earn dividends tax-free. For that, Portugal's fantastic. In addition, I was just having a call with somebody earlier today who earns royalties. Also, royalties, zero tax. Now, to be aware, royalties and dividends can both be subject to withholding tax in the country where they're sent from. So depending on where that money is originating, that may or may not lead you in a good situation. And if you want to get into the specifics about that, you can reach out to us and we can discuss it. So for any of those groups, it's pretty good. Now, let's talk about the people who are in crypto who are not just buying and holding. So maybe you're doing some sort of an NFT launch. Maybe you are yield farming, staking, lending, etc., actively trading. All of these can be taxable in Portugal. So just because of the fact that the denomination of what you're being paid is in crypto does not mean it's not taxable. The appreciation, the fluctuations in price are not taxable. But if you're getting more of it, interest income is taxable. Dividends wouldn't really apply here. sales of something are taxable, etc. In addition, even if you're talking about changes in price, if you're an active trader, if they consider it to be your main income, can be taxable. And so that one's a little bit trickier, and we can get into the specifics of it accordingly. There are some ways to plan around some of those scenarios. So in certain people's situation, yes, you can work around that. It can be a fine option. But you have to be really careful. In addition to this, what about people who are investors? So yes, you can get certain foreign income tax-free, but capital gains are taxed at 28% in Portugal. This is higher than the UK, higher than the US, higher than a lot of different countries. So it's not a low tax environment in that regard. Okay, so if you're earning capital gains, unless it is something like foreign real estate, then you're typically going to be subject to tax locally, and that's not particularly great for you. So would recommend you stay away from it. So that's kind of the next piece. The third thing, and something that will sometimes come up is they'll say, oh, well, you don't actually pay the tax. It's paid by the person. It's basically paid on a withholding basis. So what? It's still the tax. It's not as though you aren't taxable. It's that who it is that actually does the tax remittance for you. If they take it off your paycheck before you get it versus you get the full paycheck and you pay it, it does not matter. You're still paying the tax. So the tax is still there. Don't be fooled by some sort of a misnomer there. Now, this comes to the next group of people who I think are probably the most off when it comes to Portugal, which is freelancers. Okay, if you are working in Portugal, Portugal is a high tax country. Okay, they have a socialist government. They are, they're just not a friendly country in that regard. Yes, you can get your 20% tax under the NHR if you're qualified, and it's pretty easy to qualify in most cases. However, that 20%, then you can be hit with socials, and socials are super high. So you can basically end up paying somewhere around 50%, 40 to 50, depending on the tax brackets you're in. The top tax bracket in Portugal is 48%, and then it's 80,000 euros a year threshold. So it's not a very high threshold if you were to compare to, for example, your tax rate will be much lower in Texas or Florida than it will be earning the same income in Portugal. Okay, so be aware of that, as it could catch you. Now, the next thing to realize around that is, what about if you have a foreign company? Okay, now you can use foreign companies, and this can work out pretty well. This being said, there are a bunch of rules to plan around. Now, the good news is Portugal is not that great at enforcing their rules, etc. So they're a somewhat disorganized, overworked country, and they don't seem to pay a ton of attention to people who are under the NHR. However, it is worth understanding that there are a bunch of anti-avoidance rules, the controlled foreign companies rules, the management and control rules, the permanent establishment and source income rules. All of these exist and could get you into trouble. So yes, if you can structure your business correctly and operate through a foreign company, you could be perfectly fine. But if you're talking about a place to set up and just be a sole individual operating, this is not going to be tax friendly for you. Now, I have done a video previously on something called the simplified regime, which can benefit people. Just to quickly clarify around that, because people had a bunch of questions. They said, oh no, well, it's actually a 25% discount, not a 65% discount. Depends on the type of income. So under the simplified regime, for those of you who don't know, you can go back and watch my video, but you can become a sole trader, and under that you can qualify for this simplified regime under 200,000 euros a year. And there's something called category B income, okay? And category B income has these various different subcategories under it. Now, the different subcategories each have a certain amount that they can be deducted. And yes, some of them are 25%, meaning you pay 75% of the total rate. However, if you get what's called liberal services income, then it's 65% deduction. So depending on how your income is categorized, you can end up saving quite a lot. And there's a mix and match method you can use there to try and see what will work. This being said, under no circumstance is it a great environment for freelancers. It just can be in certain situations if you're able to kind of make it work for your type of income. And then sometimes you can also end up getting income from, for example, royalties as part of what you're doing, or maybe there's some sort of other bonus piece that you get that can be paid out as a dividend or whatever. And so that combination can work pretty well. Anyway, so yes, Portugal can be great. I mean, people like the weather, some people really like the lifestyle there, the nature, etc. The cost of living is quite low. You're in a situation where they do have pretty good visa options. I'll bet the visas do take a fair time to process. It's fairly easy to get banking there as foreigners, although the banking quality is not that high. It's not terrible either. It's kind of mediocre. You can get crypto-friendly banking, which is great there. You can be in a situation where you can have certainly some tax advantages in the right situation, and you can lead to citizenship fairly quickly. So all those things are wonderful. However, if you're in one of these categories where you're an investor who's earning capital gains, it's probably not for you unless you can structure it through some sort of other method. Again, reach out to us about that. B, you're in a situation where you're earning the right type of income. Or C, you have some sort of crypto that is going to meet the standards of not being taxable. So I hope that helps. Let me know if you have any questions, put them in the comments below, and I will look forward to seeing you on the next video.